Hi, everyone. Very nice to be here today at the Istanbul Fintech Week with a very exciting topic about embedded finance. I think it's one of the buzzwords of the year. Everyone is talking about it, but what is the future about? So we have a group of specialists that will be able to answer a couple of questions. I hope you will be able to understand my French accent. I apologize in advance. But we have like a really, really good panel today, and I'm very excited to ask them a couple of questions. So I'm going to ask them first to introduce themselves and what is your knowledge in embedded finance and what you can bring to the table today. So
okay, hi everyone, happy to be in Istanbul. I will start by giving my personal experience in Istanbul when I was in National Bank of Abu Dhabi. And we used to come here for a tournament with Visa International that puts everyone, all banks or member banks, into a competition of who wins a strategy in a marketplace. And I have to tell you, most of the years, the Turkish banks has always won. So to be here, I'm very honored. And I know the best technologies and the best platforms with most innovation that have come through are the Turkish banks, the Turkish fintechs. I can say a summary of the fintech scene in Turkey is much more rich than where I come from. Even in the Saudis market, I was discussing this with a friend of mine. My experience is 30 years in startups. I started the technology and the automation of capital domestic market in NBAD. Started first Gulf Bank, started Abu Dhabi Islamic Bank, one of the biggest banks, then Finance House Group, and lastly, Mbank. I'm happy to be amongst the distinguished panels and with you.
Thank you. And Murat?
Hi everyone, this is Murat Çağrı Süzer in Turkey. I am Çağrı. I moved to Dubai recently, and over there I'm Murat, because Çağrı is really complex to pronunciate. So you can pick, Julie, and
yes.
Most probably it's going to be Murat for you.
Yes, yeah. I think so.
My background is banking and fintech. I work for BBVA in United States, in Houston, and then I work for Garanti BBVA. What I did was first consumer SME banking, digital AI, and then briefly consumer and investment banking, different parts of banking. And then I found our crypto company at BBVA, ran our payment systems company as well. So I'm kind of a fintech person as well. What I do as of today is I'm running Network International. That's a financial technology company, the biggest one in Middle East and Africa. And we are in 54 countries. What we do is payments at the core, and then lending, insurance, data and insights, and fraud and risk solutions. Our volume is around $400 billion. And what we do and what we are planning to do is to merge with other companies in the region to serve better to businesses and other financial technology companies as well.
Perfect. Thank you.
Well, I gave a keynote so people have some introduction about myself, but I'll tell a little story about myself. After 18 years with Citibank, I got a call from the Central Bank of Singapore, and they told me, join us. And after 2 months of debate in my head, I decided to join them. Then the governor told me, go around the world and figure out what Singapore has to do in fintech. After 6 months, I came back with meeting a lot of people. I was depressed. I thought I made a bad choice. Why? Singapore is very well banked. There's no need for fintech. And Singapore is a small market of 6 million people. So what should fintech do there? So I thought I made a bad choice. Because I had nothing to do, one thing I did out of frustration is I wrote a first policy note to the banks that if you are not going to have any fintech competing against you, open up your systems for fintech to partner with you. And the first policy note I wrote was on the embedded finance in 2016, where we published 500 API handbook. Because of that frustration, we created a new class of fintech in Singapore called B2B fintech, and Singapore became the 4th and 3rd largest fintech hub in the world with almost close to zero, $20 million annual investment to Singapore. It went to $4 billion annually in Singapore. So embedded finance got me to the right place. That's all I can say.
Exactly. Thank you so much. And maybe I'm going to ask with a question for Morat. So, at the beginning, if we have to set at present, right now, what embedded finance means for traditional bank and fintech, what would you say at the moment? What is currently the use case, and what do you see would be the impact at the moment of embedded finance?
Sure. Well, let's start with why we need embedded finance, and we go from there, right? I don't think anyone needs any kind of finance specifically. What we need is to buy stuff, sell stuff, live our lives. While doing so, we need everything that's embedded in it so that we don't need to do it by ourselves. So what happens is the following. We take an Uber, and we need to go from one place to another. While we are doing so, we don't want to pay, but it's part of the process, right? So payment has to be invisible in there, and it's embedded. So as long as we don't see the actual transaction happening, it's a successful embedded finance example. So this is how I typically define when we talk about embedded finance. The more invisible it is, the better.
Yeah.
When we talk about the traditional banks, so when I go to my banking experience, the banks, they have two things that can deliver. One is we have a balance sheet at banks, which means that a retailer, let's say Carrefour, in here, Hepsi Burada, or any other player that you can think of, for their customers, they need to provide them options in terms of how they are going to pay. It could be a buy now, pay later. It could be a sell now, pay later offer as well. For those, they don't want to keep the balance in their balance sheet, so the balance of the loan. It's a revenue item for them, but also a risk item if they keep the balance. So that's where the banks are coming in, because banks for thousands of years, they know how to handle the balance sheet, and it's regulated that way. So that's one thing that the banks are offering. And then the other one is, it is very costly to do know your customer, to do anti-money laundering prevention. And it's very costly to do it in different countries by different regulations and etc. And banks are already doing it. So those are the two things that typically the traditional banks are putting on the table immediately, and it helps the overall environment in terms of embedded finance. Now, my final comment is, how about the financial technology companies? How can they help? One question that I ask typically to anyone is the following. When I visit the CEOs of the other companies, I ask, do you know your market share? Typically, more than 90% of the time, the answer to that question is no. No one knows their market share. You go to a retailer, again, the same names that I just counted, and ask them if you know your market share, they wouldn't know. How would they know? They go to an agency and ask them, can you just count the receipts outside of the gates for me so that I can know the market share of Carrefour? Versus what we can deliver as fintech companies is we can deliver that service real time, so anyone in the world can know their market share, because the payment rails have all that information anyways. So that's one other example in terms of how embedded finance, using its data and infrastructure, how fintechs can help everybody else in the ecosystem in terms of finance and the outputs of it.
Exactly. And what we see, the emphasis of what you describe is mainly the customer experience, right? We are focusing heavily now for embedded finance in customer experience. So what are the challenges that you can see first in that aspect for traditional bank and fintech as well?
The main challenge of, and then I have really like two very, you guys know this as much as I do, maybe much more. The only thing that I'm going to add is the following. For embedded finance, the main challenge is that it is different everywhere. So we operate in 54 countries, and we are serving to clients in 54 countries, but in each one of them, the conditions of embedded finance is different, and it's regulated differently.
Yes. Which
means we have to build it one by one for each one of them. It complicates it significantly, right? So if I count just one big issue for us specifically, then it would be that.
Oh, that's very interesting. So Wassim, I want to move to you now. So if you can tell us a little bit about mBank and the community aspect of mBank, because I'm not sure everyone understands the concept, and also to explain what mBank has been doing and how do you use embedded finance in the day-to-day?
Excellent. So 3 years ago, I've been to Harvard in leadership, and the discussion we had in Harvard always goes down to the purpose. So why we are here ourselves today, why a bank is there, why a shop, why a fintech. So the most important thing in everything we do today is the purpose. So digital is an enabler for our purpose. So when you say about embedded finance, another view, and what Murad said, is when you go and service the community, and you have the community as the center, not the customer, the community with its segments, with its customers, then you are hitting the first tick of embedded finance. So in our case, what we have done is that we wanted to have financial inclusion for everyone. As you know, banking is a cost, transaction, KYT, KYC, etc. So this cost is heavy on banks. So banks provide these services against fees. Yes. They ask you for minimum balance charges, monthly fees, etc. So part of our service is to provide banking service as part of the financial inclusion program of the central bank. So that's number one. Second, on the corporate level, we wanted to bring technology tools to SMEs to support them in their daily transactions and their daily business. So it's not only a payment. Yes, Murad gave an example of the payment of Uber. Yes, he's right. So Uber decided to move from moving people to moving money. Yes. So as people move, money moves on Uber platform. But that's the simplest form of embedded finance. The embedded finance we're looking at is that it's a platform. Instead of being a mobile manager, managing a mobile middle office, back office, we want to orchestrate a platform where fintechs can come and join through an API and provide a value. And that is the second tick, is the technology stack and the API capabilities to integrate with fintechs. The third tick that we're working on is to bring everything on basis of blockchain technology and powered by AI. So AI today, going back to community, we would like to use AI to get people to maneuver around their financial needs, what products should they use, what budgets, what suits their financial objectives, and technology is the best tool. Putting all of this together in a super app, I think that is the aim of our bank, and this is how we see embedded finance in the context of mBank.
No, that's great. And I saw that your experience you have done many IPOs in your career, so we see as well a lot of examples of digital IPO being launched more and more. How do you see embedded finance having an impact as well in that extent?
Okay, so again, IPOs, the new AE were manual process. You have to go to the branch. There are regulatory issues. So we were the first to digitize through integrating with DFM, Dubai Financial Market, Abu Dhabi Stock Exchange, and create investor numbers and put up subscription applications and drive the whole process of customers and automating the triggers of buy or sell and make it easy. And that have really made us today, after 2 years from the IPO market, we had the last IPO, which is listing of Dubai REIT. We were number one in terms of volume of transactions and number of subscription above the biggest banks in the country. And this tells you how important for customers to have one single experience, one single sign-on, one single tick. So that is also one part of embedded finance that have helped our bank to develop and to be more known and to start taking market share from the market.
So if I can make a summary of what you discuss and the examples that you give, I want to move to you, Swapnendu, and your experience, because usually we see regulators with innovation, and especially, like you said, you use it as a leverage, right, to differentiate and to provide a more innovative environment for fintech. So what do you think regulators should be careful with, and what they should do to encourage this trend? moving forward. So I would like to know your view.
Well, I think if you ask any leading regulators, the way they respond to embedded finance is because by design, banks doing embedded finance means, in a way, it is an outsourcing of an activity outside the bank's tech system, data center, into a third-party system in a third-party website. That triggers one of the most draconian regulation every central bank has, called tech risk outsourcing guidelines. You ask any central bank, the prescription they have given for embedded finance is almost like you can't do it. If any bank today is doing embedded finance, if there's a one single cybersecurity breach coming through the weakest touch point where it is connected, I can tell you the punitive punishment is huge. Now, how do regulators get over this thing? I think the best way to do, in my own experience over the last 10 years, is to have a very thoughtful outsourcing guidelines with API being the part of the architecture, ensuring the endpoints are properly governed by the banks which is doing this embedded finance. That's one piece. The second piece, I think given it's a regulated sector, there is a requirement for a regulatory framework to capture the endpoint user of the API, which means if it is a travel company using their bank's API for selling an insurance, that travel portal must have some obligation to respond to the compliance requirement of the bank. The third challenge or third regulatory framework which could be useful is to encourage the banks to open up their system so that they can get a direct inbound innovation coming through partnership into the bank's own diversified tech stack. Now, that's on the regulatory side. But having an embedded finance brings also a huge exposure to cybersecurity. Huge exposure and consumer protection issues, because you've got to ensure that endpoints are also not violating those consumer expectation pricing side. So there's a consumer protection issues out there. So today, if I look at the regulatory landscape, it's not designed to support the true embedded finance. The examples which we just heard are embedded finance from a public infrastructure perspective, whether eKYC or a payment API. So till payment API, it works because you're processing a payment on a third party. But if you go beyond that to other financial product, you face this huge friction. So there is an existing challenge in the regulatory framework to support a true embedded finance.
So that's very interesting, and it helps me to move to the next topic, which is the future. Because we see now, especially from payment network, from different fintech innovation coming so fast compared to what the system, the technology can support, what is the regulation. If you look even now at AI agents, you can even allow the AI agent to pay on your behalf, which is getting so far into the future. Like, I think it's an interesting topic.
Because when you move to the new architecture, it is no more API. It is a tokenized form of the experience. So if you are moving the financial services to outside, as he said, into real economy or the real activity, then the use of tokenization will now be the biggest game changer for embedded finance. Why? You are tokenizing the whole experience and putting it into a third-party experience, almost like a bearer instrument going straight into the third-party system, which means all the issues I just spoke about becomes a moot point. So I have a big bet. The future embedded finance using tokenization as the form factor can dramatically change the way we think about embedded finance. It will remove all the regulatory risk we talk about. It will also going to eliminate largely the whole cyber issues and scams associated with embedded finance. So my bet is embedded finance through the new tech stack will be far more impactful and far more deep into the real economy.
Exactly, and we can see that so many use cases are coming up. Carbon credits. In my own field, we are an engagement technology company. We use it for employee engagement, for customer loyalty, so healthcare. So you can see so many different use cases. What do you think the future will be? Maybe, Morat, if you want to start.
Maybe I can comment on one risk and one opportunity, to be brief. The risk is the following. For the sizable players on who can provide the embedded finance infrastructure, it's against their own nature to do so. So when you think about the big banks, the moment that the bank opens its infrastructure to provide embedded finance or banking as a service, it means the client relationship is gone. So if one bank is providing the services, let's say to Amazon, then the customer is having that service from Amazon, even though it's a financial service. Why would a bank do that? If it's a very sizable bank who is already established, it's pure cannibalization, right? Then there are some other banks who are either smaller or they are structured in that way that it's their business model, then it works. But that's a big risk, because embedded finance would have been in somewhere else at this point, but it's not going that fast, and that's one of the main reasons. In terms of opportunities, I think the opportunity that I see is around the utilization of data, because let's pick a segment of customers, small businesses. Small businesses everywhere, they are underserved. They are underserved because consumers, we all understand, because we are all consumers anyways. Corporates, they are big, so you need someone dedicated to them. SMEs are in between, so it always comes last to SMEs in terms of how you serve them, and not many people understand what the needs of the SMEs are. Now, for main banks, you go to anywhere in the world, their approval ratio of an SME in terms of lending is the lowest in their book. It's the same in UAE, it's the same in Turkey, even though Turkey is one of the advanced countries. Even in UK, it's more or less the same. So what embedded finance brings is the following. If we put the banking and finance data on top of the data of the channel, the example could be anyone, but again, for everyone's simplicity, Amazon has the data for what is being sold on their platform. Bank has the data on the POS revenues, what volume, what seasonality, all KYC information. The moment that you merge those two, bring in a telecom player as well on top if you want to sweeten it, then you have all the data that you need to increase that approval ratio to something else, to provide the cash flow lending, cash advance, or any type of loan in seconds to SMEs. In the countries that we operate, 54, none of them, there is a one-click SME lending.
That's
right?
true.
Which can be done very fast, very quick. So that's the potential that I see on this one. Yeah.
Are you, Wasim?
I would like to give an example of the future. Do you know who is the highest platform of cross-border transfer happening in terms of growth? Who's the biggest? It's one of your sponsors, Binance. Yeah. I tell you how and why, and how is embedded finance changing the way banks think. And even myself, I'm a banker. I'm having a tie. One of my friends said you should take off your tie because you should be a fintech. So Binance, what did Binance do? They made it easy and very cost effective. So the cost of cross-border transfers globally is about 0.8. They brought this down to 0.05. That's the cost. And they gave a very good user experience of how cross-border transaction happens on Binance application. In the same token, Binance application provides payment, and now Binance is considering to have insurance, integration with e-commerce, and they're doing this through regulations. So we can see one case study of a fintech that has grown beyond regulators, beyond market conditions. They were driven by the demand they created outside the banking sector. And they're now doing the regularization. The same thing goes for Revolut. Revolut, the same thing. They started as a payment. They started to have deposit taking. These are fintech companies with different DNA. I think they're capable. Regulators today are like UAE and Turkey. We heard the successful case study of the Turkish central bank by Mr. Mustafa. That tells you that regulators even encouraging fintechs and technology, finance, they're also doing all the checks in terms of risks with open finance, banking as a service, the eKYC. They're providing the onboarding process seamless. So also regulators are encouraging, because if you look at the bottom line to the country or to the nation of embedded finance, it adds a lot of value for the national income. So it has become an industry. And this industry, it has its own customers and ecosystem. So, in my opinion, in 2030, we'll see embedded finance will rapidly change the market dynamics and has already triggered a change in the mindset to big banks. And that's witnessed with all sessions we've seen where big banks had to bring in smaller fintechs with different DNA so they can move faster. So that's the direction, that's the future of embedded finance, in my opinion.
Can I just pick us 1 second on Kata's point? What is taking example, I think Richard Teng will be very happy what he just said. What essentially he's saying, you're taking a tokenized money, putting a programmable code inside into a real economic product in a tokenized form, which has got all the rules and regulations to trigger based on real-time conditions, and that is the future. You're taking tokenized money into tokenized asset, in tokenized activity, and if that all happens on a blockchain network, you don't have to deal with. So embedded finance will become tokenized finance. That's the end point or the end state of future of finance.
Perfect, and I think it's the last word of our session. Actually, it's a great example, but I just want to say, could you imagine, like a couple of years ago, that we would be there now and it went so fast? Like, for me, I'm always impressed with the first time that we started to use embedded finance and we didn't even know the term at that time, and how fast it became. I feel that do you feel that we are accelerating again, or do you feel that we still have some blockers that will impact us?
I would definitely vote for it's accelerating for sure.
Yes, you feel it?
Yes.
That's
Well,
great.
as long as the regulators understand, I think if the regulators don't understand, this optimism will die. End of the day, if there's one single massive financial crisis due to issues, nothing to do with embedded finance, nothing to do with tokenized finance, something else, regulators will come heavily on the banks, and that's the end of the story. So I think we've got to be very cautious, ensure the regulators are part of the discussion, so that they be part of the process of change.
Perfect. And you think the countries that will win will be the one with the regulators that understand the fastest?
Well, I think they will, because the regulators are changing.
Yes.
But you have to empathize on them, that they also need to answerable to the people if something goes wrong. So embedded finance changes everything in our life. It also brings risk which we can't imagine today.
Perfect. Thank you very much for your insights, and I hope we answered all your questions about the future of embedded finance. Thank you very much.
Thank you.